Hey there, class. In this video, I wanted to add a supplement to what you already have with your book and videos and whatnot. And it's these problems in your homework in the first lesson on taxes that involve a tiered tax system. Okay, basically this comes down to our income tax in the United States. It's based on a tiered system, and while we could spend a lot of time talking about the current tax system in our country and learn them in and out, it would kind of be meaningless because these things change all the time. These rates will change, the amounts will change, who they apply to change. Our tax system, at least on the federal level for our income taxes, have lots of, deductions and exemptions and all these things. So I'm not going to get into the detail, like the weeds of like how you would do your own taxes. What I want to do instead is show you the overall basic idea of how this works. Right? Because this tiered system that we're going to be talking about is what tends to stay uniform, right? It tends to always be set up in this tiered system. So if you understand the tiered system, it should be the first big step towards sort of understanding how our tax system works. Okay, so let's get into it. All right, so how does a system like this work? Well, it's exactly how you might think given the word tiered, right? So we start with somebody's taxable income. Now, for some situations, this is just their income, and others, it is adjusted. Okay, you take their gross income, their standard income, and you maybe remove things from it, like with deductions to get their taxable income. Okay, but it's based on their taxable income. Then from there, the amount of tax a person pays is based on this taxable income. So the system might say, okay, here's the tier, right? If the taxable income is above a certain amount, but below some other amount, then we get a certain percentage, right? So to start with, it would probably start with 0, right? If the taxable income is above 0, but let's say below $50,000, let's say, right? Then the tax is, maybe it's like 3% of the income. Okay, so this would be the first tier. If you make anywhere from 0 to say $50,000, that's probably way high for a first tier, but this is just for an example's sake. But from 0 to $50,000, this person would pay 3% of their taxable income as taxes. Okay, then the next tier, right, you'd be above 50,000, and really it would be one of these would include like 1, so you'd be above this but below, and often it says or equal to, right? And then here this would be, you'd be above like 50,001 up to, let's say, 100,000. Okay, and here's the key to this tiered system. If your taxable income is above 50,001 but below or equal to 100,000, you would pay the next one up. So let's say it's 5% of taxable income above $50,001. So here's how this works. You don't pay the full, like once you move to this tier, you don't pay the full 5% on everything. You pay 3% on the first 50,000, then 5% on anything between 50,000 and 100,000. And then if you move up to the next tier, let's say the next tier is, okay, so let's say this next tier goes from 100,001 to 200,000. We're paying 7% of income above that. So if your income is in here, right, you would pay 3% on the first 50,000, 5% on the next 50,000, really, everything up to from 50,001 to 100,000, and then you would pay 7% on the remainder past that. Okay, so if you're in tier 3, okay, so if you're in tier 3, you'll pay 3% on the full 50,000, right? This first 50,000. You'll pay the 5% on the next 50,000, right? From 50,000 up to 100,000. And then you'll pay just the 7% on everything above that. So that's how this tier system works. It's not that like once you get to tier 3, you're paying 7% on everything. You pay 3 on the first tier, 5 in the second tier, and then you're 7 on the third tier, and it just keeps going up from there. Okay, now a lot of times what these things will tell you is instead of doing this, it will say some amount plus this percent, because it goes ahead and does the calculation for you. For example, 3% of 50,000 is 1,500. Okay, and so what most of these will go ahead and do, so you don't have to do this calculation every single time, is in the table it will say, in the first one it will just say 3% of taxable income. In the second one it will say $1,500 plus 5% of taxable income above 50,000, and it will do that stage by stage. Okay, so let's look at some examples from your homework and show how this works in action. All right, so here's a problem from the homework, and something about the homework you should know is that the system will often give you random values. So if you're asking for help on the homework, just be cognizant of that fact that you might have different numbers than I could actually see on my end. Okay, so there's all this stuff here at the beginning, but I want to look at this 2016 FICA tax rates. The FICA tax rates kind of works on a similar system, okay, because we see here we have like 70% on the first whatever of income and another percent on income above a certain amount. And that's because Social Security taxes only apply to the first amount of income. So in 2016, apparently, it was the first $118,500 in income, but that amount changes, okay? So don't go memorizing that amount or these percentages, okay? So if we want to solve this problem, okay, we suppose that a graphic designer earns $77,000 and is self-employed. How much will the designer have to pay in FICA taxes? Well, we go to the self-employed rates. The thing about being a self-employed is with Social Security and Medicare, you have to pay both what you would pay and the employer match, right? Because the employer matches the rates for Social Security and Medicare. If you're self-employed, you have to do that yourself, okay? So if the graphic designer is self-employed and earns $77,000 a year, we're only going to be in this first tier, right? So we go to self-employed, and then they only earn $77,000, so it's really just going to be 13.3% of the actual $77,000. So if we jump back here, okay, so I'm going to take the amount of income that was $77,000. Okay, and then just multiply by the percentage, which was 13.3%. So to put 13.3%, remember in math, you always make it a decimal. So 13.3, I would multiply by 0.133, and that's going to come out to be, right, 10,241. We don't even really have to round because it comes out to be a nice even number. And so if we go back here to the problem, we see that is the answer, 10,241. Okay, let's do a similar problem here. What if someone earns $200,000 per year and is not self-employed? Okay, if we go back to the table here, here's our employee rates, and it will be 7.65 on the first $118,500 of income, and then 1.45% on income above that. Okay, so we need to basically calculate the 7.65% on this first amount of income, and then 1.45% on everything past that. Okay, so here I've just rewritten it in our workspace here, so we don't have to keep going back and forth, but our tax will be 7.65% on the first $118,500 and 1.45% on everything above that. All right, so first, the amount above that, right? The amount above that, all we do is we take the actual income, which is $200,000, okay, and subtract the $118,500, and we get $81,500. Okay, so the tax is going to be, well, it's the 7.65% on this first amount, so it will be this $118,500 times the 0.0765. Then it'll be plus the 1.45% on this amount. So this will be the $81,500 times the 0.0145. Okay, and when we do this, we get 10,247. Okay, so that is how this tiered system works. This was a FICA situation. There are other ways of looking at income taxes. All right, as an example, here's another problem from the homework. We're looking at the marginal tax rates, and we basically have our income tax brackets and our tax rates. So for this first problem, we want to use the marginal tax rates to find the income tax for a taxpayer with taxable income of $991,183. So $991,000, that's all the way in this top tier, right? Because so this is head of household, so we go to the head of household column, and they are in this top tier. So remember, okay, this is not paying this 39.6% on everything. It's paying 10% on the first tier, 15 on the second, 25 on the third, so on and so forth. Okay, so let's go ahead and calculate this one, going through all these tiers. And to get that amount, right, the total of this above this is, well, we subtract. Okay, and make sure you're careful when you subtract. Don't subtract the 13,151. Subtract this one, because if you subtract this one, you're not going to include that $1, which may make a difference when you go across far enough. All right, so here we have copied the table into our workspace, and I just forgot. Okay, and then I want to remember this value, 991,183. All right, and we're filing head of household. Okay, and so it's going to be 10% on this entire amount. So the tax is going to be 10% of all of 13,150. Then it's going to be 15% of this next amount. So this amount, okay, it's not the whole 50,200 because that would include this. It's going to be 50,200 minus this 13,150. Okay, then it will be, all right, so that's $37,050. Then it's going to be 25% of the next amount, so that's 129,600. Okay, minus the 50,200. Right, so that's going to be 79,400, then plus 28% of the next tier, so that's that stops at 209, so it'll be 209,850 minus the last stopping point, which was this 129,600, right? Which will be 80,250, and 33% of our next tier. So that's going to be everything past 209,850 up to $411,500. So I'll take this $411,500, then subtract out the 209,850. Okay, to get 201,650. Okay, then it's 35%. As you can see, this is a fairly tedious process, but we're almost done. This second to last tier stops at 439,000. So take that 439,000 and subtract this 411,500 to get 27,500. And then we're at the last tier, right, which will be 39.6%. And that's everything above this $39,000. So we take the actual taxable income now, this 991,183, and we subtract the 439,000 to get 552,183. Okay, so it's going to be 10% of this, 15% of this, 25% of this, 28% of this, 33% of this, 35% of this, and then 39.6% of this last one. So the tax, I'm going to do it vertically down this way. It'll be 13,150 times 0.1 for the 10%, plus 37150. Whoops, no, sorry, wrong number there. 37050 times 0.15 plus 79400 times 0.25, okay, plus 80250 times 0.28. All right, then plus 201,650 times 0.33 plus 27500 times 0.35, and then plus the rest, 552,183 times 0.396. And when we add all those together, do our multiplications and whatnot, we should get down to, okay, we get exactly $344,200. $26.468. So when you put that in for your final answer here, make sure you round that to 47% if that's what it's asking you to do. Okay, so that is definitely the most involved one like this you would see. Okay, but let me show you one of the others that's a lot sort of more manageable. All right, so this is another example. This one's a little bit different because this one's asking you to actually find the taxable income first. Okay, but I'll show you how that works, and it's not really that difficult. This is sort of how deductions and exceptions and all that, exemptions and all that kind of stuff works. But say here we have Steve and Claire are married and both lived and worked in North Carolina, blah, blah, blah. Their total adjusted gross income was $81,000 and they qualified for the standard deduction of $6,000 and exemption of $2,500 per person. We want to use this schedule to find how much tax they owe. Now notice, we are not told that this is the taxable income. This is the adjusted gross income. The taxable income is what happens when we take this amount and subtract these deductions and exemptions to get the taxable income. Now, what's nice about this particular question is the table does a lot of the work for us, right? Because it says here, if the taxable income is more than this value but not over this value, so from 0 to 21,250, it's 6% of the taxable income. If its income is more than 21,250 but not over 100,000, then it's $1,275 plus 7% of the amount over 21,250. So this is actually doing all that work for us. All that work we just did in that last problem, this table's doing it for us because this right here, this 1275, that is 6% of this. And then in the next tier, taxable income is more than 100,000 but not over, well, that's the highest tier. Then we're told it's going to be $6,787.50 plus 7.75% of the amount over 100,000. So this number here, this 1275, or sorry, this 6,787, this is this 1275 from this tier and then the 7% from this tier. So it's done a lot of that tedious work for us. The only thing we need to do is find the taxable income. Okay, so how we do that is we take the adjusted gross income, which is 81,000, and we're going to subtract the standard deduction, which is 6,000, and the exemption of $2,500 per person. Okay, so back to our workspace, we have the total income, or the adjusted gross income, which is 81,000. I accidentally wrote a 5 there. Let me fix that. So it's 81,000. Then we're going to subtract the standard deduction. We're going to subtract the exemption for 2 people. Now this is what's happening when you hear about deductions. There's standard deduction, which is an amount everyone gets, right? No matter what, you can have the standard deduction. Or there's itemized deductions. That's where you hear about people like, oh, I donated to this, I did this thing, I paid for these taxes in state. A lot of times you can deduct what you paid in mortgage or various things like that. Other taxes you paid often get deducted because you don't need to pay them again. You don't need to double up on these things. So you can choose which you want to do. You can do the itemized deductions, which could be higher than the standard, but if it's not, then you can just use the standard. And that's sort of like business expenses and all that kind of stuff. Okay, so you take your adjusted gross income, which is here 81,000. We're going to subtract the standard deduction and these 2 exemptions, and this will give us the taxable income. Okay, so that is why we specify income being taxable, because not all of it is considered taxable. Okay, so when we do this subtraction, okay, I got an even 70,000. So this is what we look up on the table with. All right, so when we go to the table, we're at 70,000. So that's going to be in tier 2. Okay, so tier 2 says this. It's 1275 plus 70% of the amount over 21,250. All right, so here I've written it in our workstation. Our tax is going to be 2,175 plus 70% of the amount over 21,250. So to find that amount, I'm just going to call it AMT for amount. That's 70,000 minus 21,250, which is going to be 48,750. So the tax is going to be 2175 plus 48,750 times 0.07. So when we do this calculation, we get, sorry, I just realized I had copied that as 2175, not 1275. I apologize for that. So it's 1275 plus 48,750 times 0.07, which is going to be $4,687.50. Look back at this problem. Okay, it tells us to round to the nearest dollar. All right, so that would be 4688. Right, so if we round to the nearest dollar, that 0.5 would round that up to 8 there. Okay, so then what is Steve and Claire's effective tax rate? Well, this tells you tax paid divided by taxable income. All right, so you just do that. So the tax paid is 4,688, and then you'll divide by the even 7,000 or 70,000. Okay, so 4,688 divided by 70,000. Okay, that's going to be right about 0.06697. So that's about 6.697%. And the question asks us to round to the nearest decimal place, right? Right as a percent, rounded to one decimal place, so that's 6.7%. Okay, so that's pretty much it. I hope that cleared some of this stuff up, made some of those problems a little easier for you, and it can help you roll on through those homeworks. All right, so let me know if you have any questions, and I'll talk to you in the next one.